Hello everyone, welcome back to this week's Technical Insights. Global equity markets ended an action-packed week, with the Dow Jones Industrial Average eking out a gain and closed at a record on Friday. The big rally for the week came after the first major easing of the interest rate policy by the US Central Bank after a 4-year period. Last Wednesday, the US Fed slashed interest rate by a supersized 50 basis point for its first cut since 2020. In a delayed reaction, the market climbed on Thursday as investors crowd into tech names like Nvidia and shares that are set to benefit from the lower rates. Fed Governor Christopher Waller, in the first comments by a member of the Fed since the Fed chair press conference, said on Friday that inflation is coming down faster than he expected, causing him to be in favor of a half-point cut. Investors view the aggressive rate cut as a positive catalyst, and the Fed was able to effectively convince investors that the sizable cut is a proactive measure to sustain economic momentum rather than a reactive one to stabilize it. On Friday, the 30-stock Dow Jones Index inched up 38 points, or 0.09%, for a new all-time closing high of 42,063 points. The S&P 500 pulled back 11 points, or just 0.19%, ending at 5,702 points. The Nasdaq Composite Index dropped 65 points, or 0.36%, to finish at 17,948 points. On Thursday, the Dow hit a new all-time high at 42,160 points. The S&P 500 similarly also hit a new all-time high at 5,733 points. For the week, all three major US indices noted positive weekly gains. The Dow ended higher by 669 points, or 1.62%. The S&P 500 rose 76 points, or 1.36%, posting its fifth positive week over the past 6 weeks. Tech-heavy Nasdaq Composite Index also advanced 1.49%. Year-to-date, the Dow Jones Index is up 11.97%, the S&P is up 20.1%, and the Nasdaq is up 20.67%. Intel stocks jumped after the report of takeover talks in late afternoon trading and were last up 6% after the Wall Street Journal reported that Qualcomm had approached its fellow chip company for a takeover deal. In Asia, Hong Kong Hangseng Index closed above the 18,000 handle for the first time in 2 months after the Fed cut the benchmark interest rate by 50 basis points. The City Benchmark Index capped its largest weekly gain in nearly 5 months, taking cue from a global rally amid the optimism that the US economy is achieving a soft landing. The Hangseng Index climbed 245 points, or 1.36%, to 18,258 points on Friday. It advanced 889 points, or 5.12% for the week, delivering the best weekly performance for a 5-day period since April of this year. The Hang Seng Tech Index also gained 52 points, or 1.43% on Friday, pushing the Asian Tech Index up 224 points for the week, or 6.44%, to end at 3,703 points. Among the gainers in Hong Kong stocks, CSPC Pharmaceutical rallied 6.4% to Hong Kong dollars $4.99 after saying it would spend no more than Hong Kong $5 billion on repurchasing its shares over the next 2 years. Alibaba Group Holdings added 1.8% to Hong Kong dollars $87.20, and Meituan climbed 1.6% to Hong Kong dollars $135.90. Hong Kong stocks may have already bottomed out judging from the technical patterns and the turnover velocity recently. The US Fed rate cut also lowered the corporate funding costs, stimulating the Hong Kong economy as well. On the other hand, a weaker US dollar outlook also leaves the door open for more stimulus policy for China economy to speed up the recovery in the Chinese markets. Back to our local STI index, our STI index is down about 8 points, or 0.23% on profit taking, to 3,624 points after rising more than 40 points on Thursday with a 1.1% gain. For the week, our benchmark index is up more than 60 points, or 1.74%. This will be STI's 6th consecutive winning weeks since the low of 3,198 points that we saw in early August. The STI market has also rallied more than 10% during this 6-week period. Our benchmark index is tracking the gains in the global markets pretty well. In fact, on a weekly basis, we have outperformed the US market, both the Dow Jones Index and the S&P 500, gaining about 1.62% and 1.63%, with the tech-heavy Nasdaq gaining 1.49% for the week. On the STI, the top gainer last Friday was DBS Bank, rising 50 cents or 1.3% to $39, helping our index close higher. This new all-time high from DBS Group reflects strong investors' confidence in the bank's performance and future prospects. The other banking stocks also ended in the green on Friday, with OCBC gaining 1% or 0.1% to $15.47, while UOB rose 21 cents or 0.6% to $32.94. Meanwhile, Mapletree Pan Asia Commercial Trust was at the bottom of the table. It fell almost 4% or 6 cents to $1.45. So for this week's technical analysis, let's look at Friday's top gainer, DBS Bank. Last Friday, DBS Group Holding share price rose 50 cents or 1.3% to $39. This new all-time high reflects investors' confidence in the bank performance and its future outlook and prospect. Based on analysts' 12 months target price for DBS Group in the last 3 months, the average price is $40.98, with a high forecast of $43.10 and a low forecast of $38.50. The average target price represents a 5% upside from last Friday closing price of $39. Year-to-date, DBS share price is up about 28%, and for the past 1 week, it's up about 3% compared to STI performance of 1.74% weekly gain. Looking at the chart of DBS, we can see that the stocks has been on an upward trend with a very strong momentum, and DBS share price are currently above the 20 days and 50 days moving average in green and in blue at $37.11 and $36.29, indicating that we are in a very bullish trend. Last Friday, the stock tested the upper bound of the Bollinger Band at $39 and achieved a new all-time high. This means that above this level, there are not much of a price level guidance above the $39 level, other than the $40 psychological mark, which we'll be watching closely in the next few weeks. Indicators-wise, the MACD indicator is above the signal line, indicating a bullish trend. However, investors should keep a lookout for a bearish crossover if it happens, suggesting a short-term pause or a near-term correction. The latest RSI reading has also breached the 70-point overbought level last Friday to hit a high of 76.5 points. This indicates a potential short-term pullback or correction. So overall, with the RSI signaling overbought condition, investors should look out closely if DBS share price were to move closer to the $40 psychological mark. Investors could also continue to use the 20-day moving average, which is the green line that you see here, at $37.11 to accumulate DBS Bank shares further when the RSI gets back closer to the 50-point neutral reading. And these are the updates that I have for you this week. If you do find the information useful, do remember to like, share, and subscribe to stay updated to the latest market movement. And I'll see you again next week in the next Technical Insight.